Euro dollar. So the euro is seeing a bit of a bounce in recent trade after the market traded down to fresh multi-day lows down at the 106.17 area. At this point, deeper setbacks are favored back towards the March multi-year low at 104.62, but we could see a bit of a bounce in the sessions ahead to allow for some oversold studies to unwind. But any rally should be very well capped. There's initial resistance into the 108 area, but ultimately rally should be well capped ahead of 110, with only a break back above 113 to compromise the immediate bearish outlook for the euro. Sterling dollar. So cable has been downtrending since putting in a 2015 high at 159.30. As you can see here, market's putting in a series of lower tops and lower lows, and a fresh lower top is now sought out into this latest rally ahead of the next major downside extension, eventually back down towards the 2015 low at 145.66. At this point, look for the rally to stall out somewhere in the ahead of 154. Well, ultimately only a break back above the 155.10 area would compromise the immediate bearish outlook for the pound. Dollar yen. So dollar yen is finding some solid resistance into the 78.6 fib retracements off of the 2015 high to August low. At this point, the market will need to establish back above the 78.6 fib retracement, which coincides with the high from Wednesday at 123.76. Only back above this level would open the door for a more bullish resumption back towards the 2015 125.85 high and beyond, while inability will suggest that the market could be poised for a bearish reversal in the sessions ahead back down into the 120 area. Euro Swiss. So Euro Swiss continues to consolidate over the past several weeks, though the market is confined to a broader recovery and should be poised for fresh upside back towards the recent range highs at 110.50 and towards 112 further up. At this point, setbacks are very well supported on dips ahead of 107.14, with only a break back below this level to compromise the immediate constructive outlook for Euro Swiss. Aussie dollar. So Aussie is seeing a bit of a bounce over the past several sessions, though ultimately the market continues to be confined to a broader downtrend, and any rally should be very well capped ahead of 73.82 in favor of the next downside extension towards and below the recent multi-year lows just ahead of 69. At this point, only back above 73.82 would compromise the immediate bearish outlook for Aussie dollar. Dollar CAD. So dollar CAD has seen some setbacks over the past couple of sessions, though ultimately the structure remains highly constructive, and any setbacks from here should be very well supported into the 130 area ahead of what should be a fresh upside extension beyond the September 11-year high at 134.57. At this point, only back below 128 would compromise the immediate bullish outlook for dollar CAD. Kiwi dollar. So Kiwi has seen a nice recovery into Thursday trade, although again the market here is confined to a broader downtrend and should be very well capped into rallies well ahead of the recent highs that we saw up around the 69 area. At this point, deeper setbacks are favored back towards the August multi-year lows, and any setbacks Any rally should again be very well capped ahead of 69. Ultimately, only a break back above 69 would compromise the immediate bearish outlook for Kiwi dollar. SPX 500. So the S&P 500 has pulled back from recent highs at 2117 that are just shy of that 2137 record high from May. But a recent recovery rally suggests that the market could be poised for another move to the top side, but the market will need to establish back above 2117 to confirm and open a bullish continuation. Inability to establish above 2117 will suggest that the market could be putting in a more significant medium-term lower top ahead of the next major downside extension. Key levels to watch over the coming sessions come in at 2117 above, and the recent low that we saw early in the week down around 2003. Gold. So gold is attempting to mount a minor recovery following the latest breakdown to fresh multi-year lows, with the market trading down to as low as about 1065. At this point, though, daily studies are oversold, and we could see a more significant bounce before the market considers fresh downside towards major psychological barriers at 1000. Ultimately, though, the market will need to establish back below 1065 to confirm the possibility for an acceleration towards 1000, and in the interim, there is risk for a more significant bounce. But a break back above 1100 will be required to officially alleviate immediate downside pressures in the gold market.